continuing on this conversation, has the halving changed your opinion on investing in other altcoins within a diversified portfolio, or are you still primarily focused on Bitcoin? What does your portfolio look like right now?
At the moment, I've got about 80% in Bitcoin. I went on 100% into Bitcoin into the halving just because there was a lot of excitement and hype around the halving event. But I did taper that back somewhat. Still 80% is a lot for me. Usually as far as a crypto-only portfolio is concerned, we talk about 50 or 60%. What Tone mentioned, though, I just wanted to dispute because I understand that he's looking at the directions and everything like that, but percentages matter. And if we look at just from the bottom in mid-March, so March 16, the stock market is up 11%, whereas Bitcoin is up 82%. So that means that we are breaking that correlation somewhat.
Thanks, Monty. Tone, would you like to respond since it was directed at you?
Yeah, to me, percentages don't really matter that much because we are comparing one of the most liquid markets in the world versus a very illiquid market. I ran into the same thing with and also the price just differences. Not that much liquidity in Bitcoin. You mentioned, Mati, how the CME futures are getting a lot more volume and liquidity, and things like that will help. But I try not to compare percentages of something that's very illiquid versus something that is. I'm running into the same issue with gold and silver. I took the silver trade, which worked out very nicely a few months ago. Both of them were kind of breaking out, and I didn't want to. I wanted to just choose one. I didn't want to manage too many trades. I chose to enter the gold breakout trade, and gold only went up 3%, and silver went up 11%. So I didn't choose wisely on that breakout. Different assets. And the gold and silver are way more similar to each other versus S&P and Bitcoin. And if we can have one precious metal go up 3% while the other go up 11%, simply based on speculation, there's not that much inherent demand in either of them. And if there is inherent demand, it would be towards gold, not towards silver. So it's just speculation and a less liquid market that can drive percentages much higher. Okay, and what was the other question on Leah?
Your other question, to Monty, was specifically, is he more interested in other altcoins post-halving?
I know Tone's answer on that one.
That's easy. I'm 100% Bitcoin, 0% altcoins, and it's been that way since about 2015, 14, God knows.
Since the altcoins were born.
Yeah, almost. No. I had my shitcoin phase for like maybe 6 months a while ago, back in like 2014, but that ended fairly quickly.
Let the record show, Tone just admitted. Anatoliy, how much do you weigh technical analysis and fundamental analysis, just from what you're seeing day to day, as important for just sorry, let me rephrase that nice and easy. How much do you think technical analysis versus fundamental analysis is important in understanding the crypto market over traditional markets?
It's a good spin. I mean, usually when people ask me about TA in the traditional markets, I just say that I've yet to see any successful trader or firm utilizing TA and making money consistently year on year. But with cryptos, it's sort of hard to trade from the fundamentals, and people still want to gamble, so they resort to technical analysis. I hope I'm not sort of offending any trader here. That's just my take. I've always tried to approach crypto same as I approach stocks, so from the fundamentals. And if you take this approach, obviously you're not going to have more than 3, maybe 5 cryptos in your portfolio. All the rest is just, I don't know, totally insignificant in the grand scheme of things, like completely irrelevant, to be honest.
Thank you. Mati, provocative question. What would have to happen for Bitcoin to drop all the way to 1,000?
I don't know. unforeseen circumstances, I guess. Problem with the network. Could be, I don't know. Look, if we see too much activity on Bitcoin, we could get a clog in the network, and that wouldn't be good. Transaction fees go up, people start leaving. I mean, we saw something of that in 2017 when we were at $20,000 per coin, but obviously that would imply that the price is going up very quickly, and hence the reason people want to get in. I don't really. I mean, it's possible. Anything is possible. I mean, Bitcoin could go to $100. I wouldn't want to rule it out. I mean, especially if, I don't know, some smart guy came and figured out how to hack the network. Still early days, so I guess that's a possibility, even though I don't see it as an extremely likely one. I think it's probably a lot more likely that we'll see some ridiculous figure. Pick your highest number. 50,000, 250, a million, I don't know what it is. But obviously, nobody can tell the future.
Thank you, Mati. Tone, turning it to you.
Ridiculous.
Oh, hey,
sorry,
no, please go for it. What'd you say, Anatoliy?
50,000 is not ridiculous. It's like...
So what would it take for us to get to 50,000?
I want to answer both of those questions. So FA versus TA. So before I talk about FA, I want to separate real fundamental analysis versus listening to CNBC and Bloomberg or reading articles and reacting to the news. That's not fundamental analysis. A lot of people confuse, reaction to news events as I'm doing fundamental analysis. No, you're not doing any fundamental analysis by reading publicly available information. So let's remove reacting to news events. So as far as real FA, real fundamental analysis of, let's say, looking into earnings reports or paying attention to how the company is doing, or even in the cryptocurrency space, FA versus TA, the bigger your operation, the more you're going to be focusing on FA. So if, because as a small trader at home, you do not have the ability to do real FA. It's just impossible. So the only thing you can do is do TA based on, where the big boys are moving their money. And the bigger you are, the less TA is useful to you, and the more you need to focus on fundamental analysis. And that's why none of the big firms none of the big trading operations are using technical analysis. They're using fundamental analysis. But if you're an at-home trader, your best chance of success is being good at TA because FA is just impossible for you. Now, on to the other question, Bitcoin dropping to 1,000. Again, I'm going to change the question slightly. What are the, it's not whether a Bitcoin falls to 1,000, it's whether it stays around 1,000. And that I don't see. Like, for example, if we go to sleep tonight, and then we wake up in the morning, and while we were asleep, Bitcoin dropped down to 1,000, but by the time we woke up, it was back to 9,000. It doesn't really matter. Well, it doesn't matter to us. I'm sorry. Matters
unless
to
you got
some
a stop
people.
loss.
Well, yeah. Well, if you're a trader, it matters, right? But if you are like a Bitcoin hodler, and the majority of people are, like how much Bitcoin is really out there on exchanges versus how much Bitcoin is, saved away in cold storage. It's like you woke up in the morning and you found out that during the night, gold dropped to 20 cents. And now you woke up and now gold is back up to $1,200. So yeah, it affected some people, but the people that it affected is really, really small. So the real question is, what are the chances that Bitcoin drops down to 1,000 or lower and actually stays there for an extended period of time, giving the majority of the people to consider what's going to happen to Bitcoin's future? And I think the probability of that is extremely small. We could have, other exchange failures. We could have, Satoshi come out and like sell his coins at once. The real question is, what is the probability of Bitcoin going down that low and staying there? And unless there is a huge bug that like destroys the Bitcoin code or some, global crackdown on regulation on Bitcoin, I just don't see it. I just don't see Bitcoin going down that low and staying there for more than an hour or two. So I don't see that happen.
Thank you, Tone. Anatoliy, by the way, gentlemen, whenever you'd like to respond to each other's conversations, I am no dictator. Have fun. So your response, Anatoliy, and also we have now a bullish and a bearish case of 50,000 and potentially 1,000 with different scenarios, what may get us there. So if you could also respond to your thoughts on both, either, whatever you're feeling.
I don't think anyone here is expecting 1,000 at least to stay for some continuous time, and I would gladly sell 1,000 puts to anyone willing to pay to put a nice bid, but no one's putting, like, there's no market for Bitcoin 1,000 puts. You cannot get a bid even like a 0.000 something, I assume. So there's that. And 50,000, I mean, we all seen December 2017, and so 50,000 from 10,000 we are right now. It's not unreasonable. It's like normal business for Bitcoin. So there's that. Also,
Matti, were you
agree,
saying something?
Tone, on the TA point. I agree that fundamentals in crypto is a sort of a very like uncertain matter. It's hard to define a fundamental for a blockchain project like Bitcoin, but you can actually
the fundamentals are the rate of issuance, right?
Yeah, a lot of stuff you can actually process more. You have more access to stuff like wallet creations, transaction volumes, etc., which is on chain compared to traditional companies. So you cannot like grab data from the books of Microsoft. You only receive earnings calls every 3 months. In Bitcoin, when someone moves coins from Coinbase to Bitfinex and then some USDT is printed, you can monitor it online instantly. So there's a huge distinction, and a trader at home can and should utilize it, and that's for sure.
So what you're saying is there's a more level playing field because the data is more open source. Yeah. Certainly there are companies like Chainalysis and those that, you know, kind of do more in-depth research and analysis on the blockchain. But in general, I agree with you that the playing field is a lot more. But I also, obviously, I've never been inside of a hedge fund, but I do receive technical analysis from Goldman Sachs and several others. Perhaps it's just the sell side, but they certainly are producing it.
Thanks. Anatoliy, a follow-up question from your perspective. With more and more sophisticated investment products coming out, what do you think is going to get the biggest interest moving forward? Are we going to see more of a spike in, you know, in futures and, you know, derivative spot? What's all the excitement? Where's the interest going to go?
Two things. Well, first, I guess options. CME launched options this year. They have surprisingly low volumes. Like futures trading picked up much faster than options are doing. The volume is getting there, but it's like nowhere near Deribit even. So it's like very, very low. And the markets are illiquid, so you cannot get a good trade. So there's that, but it will improve. It will improve, I have no doubts. And second, after the BitMEX fiasco of March 13th or 12th night from 12th to 13th, I think more and more people will care about the credit risk of the exchange. And that will mean basically three things. Either moving to decentralized finance trading, or using separated clearinghouse arrangements like traditional exchanges actually do, that will cover a bunch of exchanges, and you will know that your money are safe with a clearinghouse, and if BitMEX goes down, you do not bear the losses. Or third point, I think, is the leveraging of the market and coming with new ways to provide leverage with a guaranteed backstops. I know some projects working in this area. Basically, you'll need to cover, to buy an option from the opposite side of your trade that will cover his or her blow-up exposure. Like, it gets a bit complicated, but after what happened on BitMEX, all the institutional guys I've talked to are really concerned with the credit risk of the exchanges. And these three ways to solve it, they get more and more attention.
That makes sense.
Not your keys, not your Bitcoin, right? I mean, shouldn't we have all been worried about credit risk of exchanges from the beginning? I was just looking at Tone's face when you said the word clearinghouses. I think something might have popped there. Bitcoin has the option to self-custody. We don't need to necessarily put it anywhere else.
And so absolutely true. And at this point, I feel like Tone's going to run off and get his Rodolfo's hat that says, you know, the honey badger, not your keys, not your coins. But before he does, one more investment product. Tone, are we going to see an ETF?
I think we will. Probably. I think we will. Again, I wrote this article in the beginning of the year on January 3rd. I think my outlook for this year, and one of them was my price outlook. The other one was like hash rate and Bitcoin's dominance over these altcoins is going to rise. But another thing I wrote was by the end of this year, I'm not expecting an ETF to be out by the end of this year. But I am expecting at some point this year, the SEC is going to have to say that, okay, guys, we will work with the company to give you an ETF because there's just going to be so much demand for it. And it's not fair to retail investors that don't have a real opportunity of a liquid, legitimate ETF. We have futures, that's very leveraged. We have options, that's very sophisticated. I'm an options trader. I would love for those CME options to have some kind of real volume so I can trade those in my retirement account, because that's what I'm currently doing in my retirement account, trading options. And my only option in my retirement account is GBTC. And I've always been critical of how GBTC was structured with this giant premium. And the regulators need to find a way to make a legitimate ETF. Now, we just saw this with USO, the oil ETF, when no one expected oil prices to go negative. So crazier things than Bitcoin going down to 1,000 have happened recently, even this year. And they had to restructure the way the underlying of USO functions, because once the price of oil went to unforeseen levels, people took a look, how is USO constructed? And even I said on my channel within 5 minutes, oh my God, that's going to be a disaster for USO. So they immediately got permission to restructure it. So they're going to come up with a good solution. It's going to be challenging. Who's in control of the underlying Bitcoin? How do you make sure that the price that determines the value of that ETF is legitimate? And the CME ran into this problem as well, because the index that they're using is relying on crypto exchanges, and they realized they don't really have transparency into those exchanges like they wanted, and those exchanges aren't exactly cooperative with the US government because some of them are not even US companies. But I think some clarity on this issue is coming, and within the next 2 years, I think we will have a Bitcoin ETF.
Thanks, Tone. Mati, what are your thoughts?
I actually don't know. It could happen, could not. I mean, I know that Ryan Selkis from Masari was pretty bullish on getting a Bitcoin ETF. I mean, you know, Gabor Gorbaks from Van Eck has been pretty much staking his career on it. I've just learned that Tone Vays thinks that we're going to get an ETF within the next 2 years. Honestly, I'm not a lawyer and I'm not familiar enough to make that kind of call. I think that it would be a good thing for the industry. I think that it would be a good thing for the world, and let's hope it happens.
Thanks, Mati. And Anatoliy, can you tell us, what do you think are the biggest mistakes that other crypto hedge funds have made?
Leverage. I mean, the three most common mistakes in general we've seen is leverage, concentration, and illiquidity. And any of these three can kill a hedge fund or a prop firm really fast. But in crypto, leverage, as we've seen again, this event, March 13th, it's really impactful. Like the whole industry is like still shaken up and rebuilding processes, risk controls, etc., deleveraging too. So leverage on that night would have killed you. We know some funds that they have lost close to hundreds of millions USD for this only reason they were leveraged, even like 1 to 2 on BitMEX. So just borrowing the same amount of money they thought they have. So leverage in crypto, even if it feels lucrative, you think you're gonna do like 5-7 very impactful trades in a row and double your NAV, double your account, you have to use leverage for that. I would advise against it, and I would advise to check very carefully how your portfolio going to behave at another disaster scenario like we've seen in March on BitMEX and other leveraged exchanges. So leverage, one word.
That's a very good answer. I'm going to throw that to you, Tone. I know that you've discussed the topic quite extensively, and your law review sometimes covers also regulations on the many hedge funds that have fallen under in the United States. Do you want to make a comment to Anatoliy?
No, I agree. Money management. It's look, my channel mostly focuses on TA, but I've said it many times. No, being good at TA is not what makes a good trader. It's your money management and risk management that will keep you in the game. Because no matter how many trades you get right in a row, one wrong trade will make sure you never trade again. So that's the big caveat with every hedge fund. It has nothing to do with crypto. I mean, we can go back to long-term capital management, where the creators of that hedge fund were the creators of the option pricing model, trading options. And not only did they blow up their hedge fund, they almost blew up the entire financial system. So that's always been the big downfall. What concerns me more in crypto is that there's no regulation per se, and it's not great. And probably 3 years ago or 2 years ago, I did an episode of Crypto Scam titled Crypto Hedge Funds. And I literally took a look at some of those crypto hedge funds, and they're being like run and advertised by high school dropouts, basically. And you can tell this by their other social media. And they were getting money. They were being written about in Forbes that they're running this hedge fund. And you take a look at the history of the people behind it, and you just can't help but laugh that no one did a Google search on the names at the top of this hedge fund. So look, do your due diligence. Don't hand over money to people you don't know, especially if it's in Bitcoin form, because then you have absolutely no recourse when something goes wrong. So those are some of this fault lies with the investors. You got to be careful. But yeah, money management is key for any trader's survival.
Thanks, Tone. Mati, follow up?
Oh yeah, sure. I'll echo that sentiment. I'll echo it times 100. Any broker or exchange that's offering 100 times leverage on crypto is a flat out scam. It's not possible to make money with that type of leverage. You just end up liquidating your account time after time after time, especially in crypto. I mean, 100 times leverage on a currency trade, okay, fine, because currencies move so little. I mean, what's the maximum that you can move in a day is 1%. Cryptocurrencies can move 10%, 20%, 30% in a single day. That's extreme volatility already, and there's no need to add leverage. If you add maybe 2 times leverage, all right, fine. But once you get up to 10 times, you're really putting yourself in danger. And as Tone said, it's all about money management. That's what's gonna make the difference between staying in the game and consistent profits versus crashing your account time and time again. For myself, and I know, I like to point at my eToro account, which is a 100% crypto account. That's less than 1% of my portfolio. So always take things with a grain of salt.
Can I take the other? I wanna make a little argument towards maybe not 100x leverage, but at least 20x leverage. I'm with you, Maddie, that 100x leverage is a little insane. But I really like the fact that, say, 10, 20, maybe even 50x leverage exists on some of these derivatives exchanges in the crypto space that I'm not going to name names. And that's for me, because I do like risk management. It provides me great risk management. It was something we talked about earlier. You have huge exchange risk. So by me having a product that gives me 20x leverage, I can risk, 19 times less BTC in a trade. So if I'm entering a trade and my stop loss on that trade is, say, a 5% move in Bitcoin against me, I can enter a 20x leverage trade and only risk the amount I'm willing to lose with a stop loss without the rest sitting on an unregulated exchange, potentially due to a hack. So there are ways to use this high leverage properly. And the other slight argument I'll say is it's not necessarily a scam to offer this leverage. Like Goldman Sachs was offering all kinds of toxic derivatives back that helped cause the 08 financial crisis. It was, if Goldman Sachs is betting, literally putting money against it, it's bad. But hey, if a company like JP Morgan or others want to buy these toxic instruments, and Goldman Sachs, if they want to buy them, Goldman Sachs will make them and sell them to you. There were other things that they did wrong and everybody did wrong, but just having these products that other people want to buy and use is not necessarily, scammy in my opinion.
Okay, but Tone, you have to differentiate yourself. I'm sorry. You are what's known as a complex trader. Certainly, you have ways to use these tools, but let's be real. They're marketing to beginners. They're marketing to retail investors who are going to more than likely, almost assuredly, lose all of their money on the platform. And if that's the case, that's what you call a scam. I'd be very surprised if any of them are taking any of these trades to the market. They're just debooking it. They're taking the money, putting it in their pocket, and let the trader lose his money.
Sure, but that's a different issue, right? I have the same view on Bitcoin. Like Bitcoin itself Bitcoin itself doesn't do anything anything bad. It's what you do with that Bitcoin that could be seen as bad. So it's the same thing. Yeah, if they have bad advertising practices and not properly educating and trying to suck people in to lose it, then that part is certainly troublesome, and hopefully there will be regulation to prevent that. But the product itself, I try to separate.
Thanks. Anatoliy, would you like to respond?
Yeah, definitely sophisticated advanced traders like Ton use and should use leverage as a means for managing credit risk. Absolutely. What we've seen, again, on this March event, is that you thought that you can, for example, in case of a crash, move funds from exchange A to exchange B to cover your margin call. And all of a sudden, you figured out that exchange A goes down and you cannot meet your margin call, even though you have the funds, theoretically, and you get liquidated on exchange B. Or exchange A is up and running, but you can only withdraw funds once a day. And you cannot cover your margin call on exchange B, and you're liquidated. Or you're sending funds from your hot wallet, cold wallet, whatever, and exchange B is processing funds every hour, and you're liquidated. Even though you was sure that you're managing risk and you're running the same leverage, you put 10 Bitcoins on exchange, you have 90 in your hot wallet, you're all good and covered, you just buy 30 on an exchange, and boom, you have no funds. So there's that risk. Yeah.
I agree. The technological capability of these crypto exchanges should be scaling with set leverage.
Yeah. At least let's at least agree that if they're going to offer anything more than 10x, that they at least vet their customers to be sure that they're sophisticated enough to use them. Because at this point, what's happening right now is really the Wild West, and it's really bad for customers, and it's giving the entire industry a bad name.
Yeah, it's no different than the .coms. I remember being in my university, and one of my dorm mates borrowed $1,000 from his brother and started trading penny stocks because E-Trade came out. Eventually, regulation will catch up to this, but eventually is a long word.
Thanks, gentlemen. Anatoliy, a question back at you. Provocative, as per usual. What type of investment interest are you expecting given the upcoming volatility that's expected from the traditional markets? Now, we're seeing green right now, but most market analysts, most governments do believe we're going to have quite bloody streets that are going to show probably very, very soon, as per especially the unemployment statistics that have continually been coming out. Now, as per Mati and Tone, there's obviously divergences between if we believe that Bitcoin is coupled or decoupled from the S&P. Also, people obviously like to say that there's the debate between risk on and risk off, and what is Bitcoin right now? So, long-winded, asking back, are you preparing for potentially less interest or more if the markets traditional start tanking?
Interest towards crypto trading or crypto investing in general.
Investing in your fund, yeah.
if there's another meltdown caused by the lockdown or a virus or whatever, the crypto will go down probably too, like gold did, like silver did, like oil did. All assets got sold for cash in March. The whole universe, even the treasuries at some point. I mean, it was really crazy. Stocks go down, treasuries go down, corporate debt goes down, gold goes down, Bitcoin goes down, like cash goes up. US dollars mostly. And that's one scenario, so I guess it's going to be the same. But if stock markets go down because of the fears that the Federal Reserve will not be able to manage the growing debt of the United States, or going to print a ton more of money. I mean, if there's a lot more money, stocks should go up. Like, that's the first order effect. But second order effect is the how investors perceive the markets. And if they think that the Federal Reserve is actually using a measure of the very last resort, printing like another 5 trillion, because if we print 3 trillion, it's good for the economy. So maybe if we print 30, it's even like 10 times as good. Maybe it makes some sense. So if Fed starts doing more and more aggressive interventions using all of its tools, it might shake the confidence in the traditional market, and then maybe people will use crypto as an inflation hedge. That idea is still not off the table, I think.
Thank you. Mati, turning it to you. Do you agree? What are your thoughts? That's an additional Paul Trudeau's type of conversation at the end there for inflationary hedge, but specifically, you know, will we see some of go back to being coupled and alts going down? What are your thoughts?
Yeah, that's an excellent question. And first of all, for an inflation hedge to happen, there needs to be inflation. While we're in lockdown, it's not very likely that there's going to be any kind of inflation. At least in the United States, nobody's spending money. There's no velocity, and inflation can't happen. So that's if that scenario plays out, it's further on down the line. Whereas what some people are expecting, at least a lot of analysts that I've read are expecting, meltdown would be more likely caused by a wave of bankruptcies and defaults on loans, which would hit the financial sector pretty hard. So if that is the case, now, first of all, this is something that I've dedicated a lot of time and research to. One of the analysts on my team put an entire paper out. How does quantitative easing affect Bitcoin and other markets? And we're in a very interesting and unique time in history where the Federal Reserve has basically said that they're willing to print an unlimited amount of money in order to prop up the stock market. So if that is the case, can stocks really go down? I mean, I don't know if you're familiar with Howard Marks. He's a really intelligent guy. He's been writing his heart out since this crisis began. I've been reading every single thing that he writes. And the way he puts it is basically, can they be the buyer on every single transaction? And I mean, the short answer is they can if they want to. But what are the ramifications of that? Well, the number one ramification is the stocks can't go down, which does kind of put us in a situation where there's a rigged market. But what's the end result of that? And that's not inflation. That could, I mean, Howard says he doesn't know, but come on, let's be real. If you're just going to print an unlimited amount of currency in order to buy everything, you're not going to be seeing inflation. You're going to be seeing flat out crash on in the confidence of the currency that you're putting out. Now, obviously, I don't want to be a predictor of doom or anything like that. But if we get to that situation, that's more than likely to happen. And yes, I believe that Bitcoin could be certainly used as a store of value. One thing that I did want to correct. Everything else was going down faster than cash as people kind of move to cash. Sell everything that they can, but I think that traders will be a bit more selective in the way that they position themselves. And I believe that a lot of the institutional movement that we've been seeing is kind of a forbearance of that, and that they're actually right now positioning themselves into Bitcoin just as a hedge against another crash like that. But obviously, that's just a theory.
Thanks, Mati. I'm going to turn it to you, Tone, and also for everybody watching, I will look at the live chat if you guys have any questions. We have 10 minutes left, so happy to take questions from the audience. And Tone, what are your thoughts on what Anatoliy and Mati have been saying?
So I completely agree with Mati on your last point that you made. That's exactly what I was going to say. And I did this analysis as well, and I talked about it on my YouTube channel, that yeah, when the crash came in March, late February, early March in the markets, everything got sold. Gold, silver, any private assets, all of them just went down. Bitcoin, and the amount of cash increased because people sold everything for cash, not knowing what to do. If something else like this repeats, many people are already out and are still out. And we're not going to see, this is where the decoupling is going to take place. I took a look at what happened in 2008 with gold compared to the S&P 500, and they both crashed in the 08 crisis. But gold bottomed around October. That's a full 5 to 7 months before the S&P bottomed in March. Gold bottomed out in October. It fell 33%. The stock market eventually fell 50% because it kept falling in a second wave. But by that time, gold already started to rise because just like Maddie said, people have cash. And if this crash is happening, they're going to want to redeploy some of that cash into what they think will provide some kind of return. We just saw Paul Tudor Jones enter into Bitcoin because he's scared of inflation. Then we saw Shidran write a post mentioning that Paul Tudor Jones got in, but Shidran is getting in because he wants to hedge against deflation. So you have like two serious investors getting into Bitcoin for completely different reasons. And I found that to be like kind of ironic, but very interesting in that it doesn't really matter why you're getting into it. And we could have inflation could come. I agree with you. Like, we're not going to have it. I don't believe, I'm not expecting inflation in the US anytime soon. The rest of the world probably. I'm also expecting the euro currency not to hold together. And these are huge catalysts for Bitcoin. So it doesn't matter whether your fundamental reason for getting into Bitcoin is. My initial fundamental reason for getting into Bitcoin is because I recognize it to be the first unconfiscatable asset. Hence, I wear the shirt and have the domain. So your fundamental, and it didn't have anything to do with inflation or deflation or anything in economics. To me, the fundamental reason was, wow, I can own something no one can confiscate from me. So once you see an asset, bucking the trend and going up, as the other assets around it are not performing as well, more people are going to want to get into it. And this is where I see Bitcoin decoupling.
Thanks, Stone. All right, and here are the ones from the audience. Starting with you, Anatoliy. Would it be much, okay, I'm going to have to rephrase this one. Is it hard to trade without volatility?
I'd say zero volatility, there's not much to trade anymore, right? Yeah,
yes.
Absolutely. Yeah.
So let's switch this up. In Bitcoin, when it's ranging, what type of money management strategy do you recommend? And therefore, let's take it back as from an investing, potentially a position trader perspective. How do you see times of low volatility, if that helps them?
Well, traditional markets, in the times of low volatility, you should check options. It's a good time to put some long positions. That's for sure. In Bitcoin, the options market are still not that major, so you have to pay some premium. I mean, the bid-ask spread can be wide. The depth of the book is not that great, so you're paying a bit extra, but you can still think of some positions. But again, that's for sophisticated traders. If you just trade spot Bitcoin and there's low volatility, well, maybe it's a good time to be like not putting new positions. I mean, unless something changes in the type of analysis you use, like something changes fundamentally. For example, the rate of the transactions goes up, or new wallet creation goes up, and the price like sort of stays still, and you see there's some again, decoupling in these metrics, you might want to place a trade. But if you're just looking at the price and it's standing still and you only trade in a delta one or linear instruments like spot or futures, it's okay not to trade. As a trader at your home, unless you're a professional money manager, as a trader at your home or basement, you have this luxury of being out of market, of being without a position. I'm just now speaking about speculative positions, not long-term investments. But it's okay to be out and not to trade and wait for the very, very proper moment to put on a trade. It's not necessary to trade 10 times in a day, unless you're doing some HFT stuff. It's like if the market is still and no fundamentals change and there's nothing to do, then take a break. That's fine.
Thanks, Anatoliy. Mati, are you in it for the tech or the money?
I don't know. I'm in it for the thrill. I see the markets as a giant video game, and you know, when I was 10 years old, I had a game called SimCity 2000, and I found out that at some point they could just master. I just mastered the game, right? So I would build the largest arcos, right, and then just fast forward time, and you get unlimited amount of money, and that's basically how I see the market is. The game where you get rich when you win.
I love that. I love that game. SimCity 2000 for PlayStation 2, right?
I had it on PC, but I think it's the same.
Yeah, on PC. Okay, same game. Yeah. SimCity 2000 for PlayStation 1 or PlayStation. No, it wasn't PlayStation. It was PlayStation 1. The original PlayStation SimCity 2000. Awesome game. Unlike Maddie, I didn't cheat.
It's not cheating. You have a time slider. You can set the pace of the time. That's not. I didn't hack the game or anything. That would be a different kind of winning.
Yeah, no, that was fun. You know, you start that game in like 1900, and you're like, oh boy, I can't. There's no electricity. How do you manage the game?
No water, no electricity. Because that's when you crash your first account, right? You crash your first account, you crash your second account, and by the time you get to your fourth, fifth account, then you're like, okay, I got this.
You know, I still remember. I spent like weeks playing the game, and then my city died because I forgot to give them like water. I forgot to provide like freaking like pipes, water pipes that are all the houses, and it's like boom, dead in a week.
There you go. You forgot to hedge your trades, man.
Anyway,
forgot to put a stop loss.
I want to comment real quick. Low volatility environments. I mean, there's no such thing as a zero volatility environment, just low volatility environment. Yeah, it's difficult to deal with in Bitcoin because the options market is, you know, so new. But in traditional environments, I love the low volatility environment as an options trader. It's great. I've been for the last month, all I've been doing is selling covered calls on stocks that crashed big time. I think some of my best trades over the last few weeks were selling covered calls on American Airlines. The day Buffett said he's out, the stock kind of crashed the next day to like $9. And I've been like, and the implied volatility went through the roof on that one. And I've just been selling covered calls like crazy. That's probably my best trade of the month so far. Yeah, if you're an options trader, you can do well. I'm definitely in it for the tech, but I'm helping to explain the tech, which should also benefit the money part.
It's a good answer. And to end the panel, Anatoliy, to you, are you in it for the tech or the money?
The tech, but this tech is, I mean, it won't make you rich, this technology, right? So whoever says he's in for the money can go trade Ripple or EOS or some other volatile coin, right? But if we speak about proper blockchains with proof of work, preferably, it's just the tech. It's not about the money. It's more about the liberty. I mean, I'm very happy I was able to get it early, and it made me some money. But I mean, I wouldn't advise anyone to get into just for the money. That would be really, no, I don't want to say dumb, but it's really irrational at this point, right? Get in for the tech, and it's like Zuckerberg was building Facebook for tech or for the money. He was just having fun. he couldn't have envisioned he'd be a double-digit trillionaire after that. Definitely no. But he was having fun with the technology, and that's the way it should be.
Yeah, can I add to that? I was working on Wall Street. My last company was a small private company, but I quit in very early 2015. And if I hadn't quit and kept working my ass off, probably could be a managing director by now, and probably would have more money right now if I never got into the crypto space, because I got in and focused on videos, wasn't even trading much. And but I wouldn't give it up. Like the ability to travel the world for the last 3 to 4 years is way better than working your ass off at the office. So I joined it for the tech, but it's nice to watch the price of Bitcoin go up.
Perfect. Monty, final words?
Well, I guess I'll answer the other question because both of them answered low volatility environment. Yep. It's the most difficult thing in the world, especially for a new trader to do, is to sit on your hands. But sometimes it's really the most necessary. And we're programmed that we always need to do something, right? Any game, right? If you play chess or checkers or anything, Monopoly, it's your turn. You need to roll the dice. You need to do something. But in trading, you have these times when the best move is actually to do nothing, because you're going to actually just end up paying a commission. One of the ways that I went from being a losing trader to being a winning trader, or investor, I would say at that point, was when I realized that diversification helps in a way of risk management, right? Because, when different markets move, you have a hedge or whatever that it's not going to hurt you. But where it helped me in my brain was to not be so fidgety, right? I have 200 different trades, right? So if I want to, if I'm bored right now, let me go over some of the technical analysis from something I haven't touched. It's sitting in my portfolio for 6 months and I haven't even looked at it, right? And that's really where it was for me. It was in that low volatility period, you just go over your portfolio, you can go over what you're holding, what might happen next, but you at least have something to do in that time. And it may sound silly, but it really worked for me.
That's very good advice. Thank you so much. All right. Thank you, gentlemen. Tone, Mati, Anatoliy, thank you so much.
Thank you, Leah.
Cheers. Thank you.
Thank you.
Hi, Leah. Thank you very much. You actually have some few minutes left. So, Leah, if you yourself would like to add any remarks or have any closing remarks, please feel free to do that. Or if there are any questions directly addressing you, Leah, you can still answer some of the questions.
All right, do we have Leah?
I don't see Leah. I think she might have left.
Yes.
That's okay.
Yes.
Oh, we have inception.
Yes,
Hey
Leah
guys,
is gone.
I'll take it. Maddie, where can people find you? We never really did intros, so we can do
Thanks,
close
man.
statements.
Quantumeconomics.io is my website. I've put together a very strong team of analysts. While you're on the website, Quantumeconomics.io, you can subscribe to my newsletter, which is read not only acclaimed by many people within the crypto industry, but also being read on a daily basis by people in the Wall Street Journal, in Thomson Reuters, CNBC, Forbes, Bloomberg, etc., who are constantly getting back to me with their feedback. So that's absolutely free, and explore the website. We have many other different services for beginning traders and advanced traders.
All right, and Anatoliy, how about you? Tell us about, I believe you run a fund, and where can people find more about you?
Yeah, we actually do run a fund, but the main business, I'd say, it's our brokerage company, Exante.eu. It's, I guess, the only place in the world still where one can trade spot cryptos plus all other financial instruments from the same account with the same margin and sometimes even cross collateral. So, for example, you can trade CME futures versus spot and get cross margin. Ain't no other place worldwide where you can do that. Maybe some OTC arrangements, but for a DMA product like with a terminal, desktop, mobile, and web. That's just us. And it's all regulated, obviously, in Europe and licensed, both the crypto part and the stocks and futures and options part. So exante.eu website, and you can check us out.
Awesome, thank you. And I guess I'll close us out. My name is Tone Vays. I run a YouTube channel under my name, Tone Vays. So also have tonevays.com. And I run 3 conferences. One is called Unconfiscatable, takes place in Las Vegas. That was probably one of the last big crypto conferences that took place before everything got shut down. We also have Understanding a Bitcoin conference. The website for that is understandingbtc.com. That one is more, I wouldn't say it's a tech conference, but it's more, it's technologically inclined, where we try to educate Bitcoin users on how to use that Bitcoin more securely, better, more efficiently. And finally, thefinancialsummit.com, which is an event for traders and funds with some trading education. And it's an event for high net worth individuals as well, so that people can get together in a week-long environment and just share ideas and cooperate on anything trading and finance related.
Well, thank you very much, everyone. This was a great panel, and thank you for finalizing the panel without your panel moderator. You guys were awesome. So let's continue the program with our next talk, for which I would like to present to you Richard Els.